Good morning. Welcome to the latest edition of Talking Bull. It's the 2nd of August. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen.
Good morning.
How you both doing?
Yeah, very well.
All good?
Superb. Okay, so we've made it to Tuesday already. Flew by yesterday, so let's get stuck into the latest headlines of what's moving markets today. Potentially a bit of a tasty session here. There's been some pretty significant moves in a few asset classes already. So what is it that's driving that? Well, first up, we've got US manufacturing cost pressures ease. That was out yesterday. The ISM manufacturing index edged lower to 52.8 for July from a previous reading of 53. However, that was slightly above the consensus forecast of 52.3. So some positive signs there. In terms of the US yields, they declined further yesterday following that ISM price data. The 10-year yield dipped to around 2.6%, which was the lowest reading for 16 weeks. And there was also a sharp decline in oil prices on the day, which reinforced the mood of optimism over underlying inflation trends. The dollar continues to be under pressure. Lower yields were a crucial element in undermining the US currency, with particular pressure against the yen. The dollar index dipped to a 4-week low yesterday, while dollar yen also dipped sharply as well to a 4-week low below 130.50 before a limited correction. The Eurozone data continued to cause concern on the flip side of what we just seen in the US. The German retail sales number declined 2.6% for June compared to expectations of a small increase, with a year-on-year decline of 8.8%. But overnight, there's been quite a few concerns about Taiwan tensions, and they're very much in focus. The political considerations were more important on Tuesday, with tensions surrounding Taiwan amid the planned US visit by the House Speaker Nancy Pelosi. China continued to warn over negative consequences, and risk conditions were brittle as a result of that. Overnight, or in fact this morning, UK time, we had the Reserve Bank of Australia increase interest rates by a further 50 basis points to take that overall to 1.85%, which was in line with market expectations. The RBA expects to increase rates further, but there were comments that rates are not on a predetermined path, which dampened market expectations over further aggressive rate hikes. And as a result, the Australian dollar has taken a bit of a bashing first thing today. So we'll get onto those charts shortly. But let's start off with the cryptocurrencies, I guess, Steve. If you want to kick us off there, and then we'll take a look
Yep.
at these.
Sure. I did a video on a number of cryptocurrencies yesterday, so you can pick that up on the YouTube channel.
That's
if you want to have a
also
look.
on TradingView as well, is it?
Oh, well, TradingView, yeah. More of an in-depth look. There's a stream on there. I went into a little bit more detail yesterday, but I'll focus on Bitcoin today. And, well, effectively, a little bit of nothingness yesterday. Doji candle, indecision, nothing really going on. Obviously, you've got the weakening dollar. That's the main story, really. That's moving markets, and anything dollar based, so Bitcoin against dollar, you're seeing prices curtail off slightly. The next, the resistance level that we're looking at, or band of resistance, we can't really pinpoint points when we're talking about Bitcoin, but anywhere between 24,300 and 25,000 first resistance, and then straight after that you get another resistance at 25,400. But the main one for me is the real main test is the 28,500 to 29,000 area of resistance. That was support for such a long time that it really needs to get up there and retest that. I mean, even if it gets up to 33,000, for me, we're still in bear mode. Further downside, I do expect over the coming weeks and months anyway on that. Ethereum, main level to watch there is 1730. That's performed slightly better overall in my eyes from a technical perspective than Bitcoin, but yeah, it's rejected this 1730 level over the last week and moved lower, trading at 1580 now. On the commodity side of things, gold continues the really sort of sharp move higher. If we there's probably a better bear channel or downward trending channel we've got at the moment. We're above the 21-day moving average, which is positive. We've had 4 days of positive price action since the bearish a bullish outside candle. So this is a correction as well. And again, I think it's mainly down to the dollar weakening. We've had such dollar strength for such a long time, and this is lent itself to this sell-off in gold. And we, after hitting the real large support area that we've got, which has been supported on a number of occasions down around about 1680, the bounce from there has been pretty decent. Potential for further upside, really, to above the $1,800 level. There's no real reason. We got resistance at 1786, then 1800, and then we run into some fibs a little bit higher than that, around about 1830. But we've got this downward trending channel which comes in on a downward sloping level from 1815. So yeah, nice bounce in gold, but I think gains will be limited in terms of how far it will go in the coming days and weeks as well. Crude oil had a big sell-off yesterday. I was looking at this really on the daily perspective, the potential for an inverse head and shoulders. We did get a break above the neckline, but it never closed above then, and came back below the neckline, closed, and formed a bit of a shooting star candle, which was negative. And we also closed below the 21-day moving average. And yesterday, the bears took full advantage of it. Again, there's other things going on which are sort of impacting on oil, as we well know. But yeah, that's back down towards this support level around about the 92.50 area, and the sort of like the main spike we got down was to 88.16. That was back on the 14th of July. And there's potential for further weakness if we manage to break below yesterday's low of 91.63. I think that'll open up the downside. And at the moment, if you look at even the hourly chart, this looks like a little bit of potential for a bearish flag, bearish pennant, whatever it may be. We had a bit of a rally in the last hour, but that's starting to give up gains already. So pressure on oil, and yeah, that's probably leads us into Joe letting us know exactly what's going on with that dollar.
Yeah, sure. Thanks, Steve. So in terms of the dollar index yesterday, we did see further declines. As you can see, there was a red candle posted yesterday, and that was the first close that we saw below this important support level that we'd highlighted in blue here, which is 105.78. There was that previous swing high from back in June. As we saw a really impulsive move to the upside in early July, and prices then extended to the highs that we saw at 109.29. But the pullback, we've seen an initial retest of that level, but yesterday we saw the first close below it. Now, interestingly enough, straight away we are into a 50% fib level. It's only a very short-term fib level. It's actually from this swing low here in May to those highs that we posted not so long ago. And so far today, that seems to be getting defended by the bulls, posting what looks to be a hammer candle, but it's very early in the session, so I wouldn't get carried away with that just yet. Certainly the short-term momentum is bearish, and we are likely to see lower prices. But if the bulls can defend this, then maybe we'll see a little bit of strengthening. Obviously, we are seeing some pretty significant moves in some other currencies, most notably the Aussie off the back of the RBA announcement earlier this morning. So if we take a look at some of these, just because they are quite interesting, we can see Aussie CAD posting a really quite aggressive bearish outside day as things stand at the minute. So that looked to be heading higher following the break of trend, but we're reversing that pretty sharply today. If we look at Aussie Swiss, we're breaking out of a wedge pattern, which would indicate further prices moving to the downside and a continuation lower. Aussie yen was really interesting as well. Looks like we formed a triple top on this. I mean, maybe a double top if we go by this top here from the 9th of June to this one around the 26th. In order to complete the triple top, I think we need to take out this line of support here at 87.30. But whichever way you look at it, that is looking pretty negative and sort of offering some rounding top price action on the daily chart. If we look at Aussie versus the US dollar, that looked to be breaking higher following the break of trend, but again, a really quite large bearish candle forming so far on the session. If we take a look at Euro US dollar now, following the weakness that we saw yesterday in the dollar index, we saw green candles being posted on that over the last couple of sessions, but we are running into some short-term resistance from these wicks of these candles here. So unless we can get above that and then rally into this even larger resistance zone at 103.48, then we may see a continuation lower in the euro versus the US dollar. And if we take a look at cable, we can see decent price action yesterday, but that seems to be stalling a bit today, down by 0.3% as things stand. Some other currencies that look quite interesting. Yen has been on a bit of a charge of late. So we've seen the euro pretty much collapse against the Japanese yen. 4 really big red candles posting on this, potentially forming a really large top pattern. This is a pretty significant area of support. As we can see here, highlighted by a number of levels, the lowest of which is at 133.15. So if prices can hold above that, then there is certainly potential for a bounce, maybe into this zone here at 136.87. But if not, then it looks like we may have formed some sort of top pattern. Not exactly a classic looking head and shoulders at this stage. Maybe we need it to do a little bit more to potentially form some sort of right shoulder over here somewhere. And then we'd have a really nice looking head and shoulders top, but plenty to do on that for the time being. New Zealand dollar versus Japanese yen, similar situation to Aussie. Looks as though we may have formed a triple top here in the shorter term, maybe a quadruple, or what's 5?
Quintential.
Yeah, something like that.
Quintilago.
Yeah, Quintilago, yeah. So yeah, looking pretty scary actually on some of these yen currencies. So it could be that we are in for a fair old reversal. So that's taken out trend support and horizontal support at the same time. And as you can see, we've seen a pretty aggressive move lower off the back of that, and that's falling in sympathy. Certainly the New Zealand dollar is with the Aussie currencies, but coupling this with a bit of yen strength as well. That is driving that lower. So maybe some potential there for a move lower towards 79.46 over the short to medium term. I'll leave it there for the currencies. Let's take a look at some of the indices. Bit of a boring session yesterday for a few of these, starting off with the Aussie index because we've had that RBA number. That is actually holding up on a weaker currency today, so looking quite robust as things stand. If we take a look at some of the European markets, they're very much on the back foot today. The DAX rallied a bit yesterday, actually closed in the red. So a lot of these indices closed in the red yesterday and looks to be rolling over. So I've got this arrow drawn for higher prices, but maybe we're going to start to see this roll over and start to head lower in line with the dominant downtrend. So some mixed signals on that for now. Looking at the NASDAQ, that continues to stall at this important resistance level that we've got here at 12,941, posting a doji candle yesterday. If you can just make it out there. According to this particular market, it closed slightly higher on the session. I think this is the sort of all sessions chart rather than the actual index, which closed lower. But we are struggling to overcome that resistance and starting to turn lower. So maybe we are going to see a little bit of a retracement there and potentially form maybe some sort of right shoulder potentially on this for an inverse head and shoulders. Still very early to call and highly speculative at this point, but overall, don't forget the trend remains pretty bearish. So it wouldn't be a surprise if we saw that roll over and continue to move to the downside. Let's just take a quick look actually and see if we've got any trend resistance here. Not quite. Yeah, not quite up there yet, but worth bearing in mind the overall trend does remain lower.
I think, sorry, Joe, to interrupt. I think on that we're actually right at a 20-week moving average on the NASDAQ. So that could be also, I might be wrong, but that was something I saw pop up recently.
Well, don't forget, we've been talking about this big top pattern on the NASDAQ, and it's been rallying into this significant neckline that we've highlighted here. And certainly so far, it seems to have done a job. The other thing that we had drawn on this chart the other day was the fixed volume range profile from the lows of the pandemic to the highs that we posted in November last year. And the volume point of control, that red line there that's popped up on the chart, is likely to act as a large resistance area. This is where has most trade taken place in this particular index, and it's pretty much bang on this line. So it needs to do a significant amount of work in order to break through this. So for me, I think, it could be sort of make or break really for the NASDAQ here. If the sellers step in and take control, then we could be heading lower over the short to medium term.
Lovely.
Um,
You're encouraging me, Joe.
Are you? Have you got this lined
Yeah,
up? Have you?
yeah, I've
Let's
got
have a
this
look
lined up now.
at Jamie's moving average just to see if that. So you said 20 week, yeah?
Yeah, we might just be actually have closed above it last week, having a quick look.
Yeah, we did. Yeah,
We're right around it though, and you can see it
yeah,
closed above it back in what was that, April, before it did end up actually selling off afterwards. So
yeah, it did. So
yeah,
Steve, you like the 21? Let's see if that.
I like the 21 day. Week wise, I'd quite like quarters and 6 monthly. So 26 week moving average for me would work.
He's making it up as he goes along here, guys.
I'll
So,
just throw a load of mud at
I
the
like
wall.
the
Some of it's six.
yeah,
24.
What's the
there you go.
26 week look like?
Yeah, it's almost like you've.
No, I'm just thinking like it's 52 weeks in a year. I'm sure. Last
Yeah,
time I looked, anyway.
yeah.
Depending on which calendar you go by. But yeah, 26 weeks, halfway through the year. Why not? What about a quarterly, every 12 weeks as well?
Well, I
I
think
don't know.
let's just leave it at that because the
Yeah,
26
leave it at that.
nailed it by the looks
Hang
of
on.
things. So we've got a
The
big
Holy Grail,
confluence
we
of
found it live on air.
a big confluence of resistance there. So we've got the neckline of this large top, we've got the volume point of control, and we've got Steve's magic 26-week moving average there, all coming together at the same point. So, yeah, I really do feel it's make or break for these indices. And if you look at what's going on in the macroeconomic environment and the data that we're getting, it doesn't paint a very nice picture at all. So, we could be in for some prolonged negativity in some of these indices, probably worse than many have experienced really when it comes to financial markets. It could be quite a drawn out process. So yeah, beware. We've potentially calling the end of this correction on Nasdaq here. Okay, that's pretty much it. I think from me, I can hand it over to Jamie, and yeah, be interesting to see what's going on in stock side of things.
Cool, thank you, Joe. It would be interesting, but as you said, yesterday was a pretty muted day, and that was highlighted among many of the key names. But we'll jump into a few of the more interesting ones, starting off with our biggest gainer and loser of the day. Our biggest loser is this OTIC, Autonomy Inc., down 79%. Look at that, 29 cents it's trading at. It's pretty rough. And let's have a quick look at why this happened. Discontinuing the development of a tinnitus drug candidate OTO313, sounds like a robot, after its phase 2 trial failed to meet the primary and secondary endpoints. So yeah, when those ones miss their trials, I don't know what I'm talking about, but it doesn't sound good. Down almost 80%. On the flip side of that, we got QRTEB, Liberty Interactive Corporation, up 326%, which is obviously pretty substantial. I couldn't really find much for why this happened other than the word short interest popped up a lot, so maybe we're seeing one of those squeezes again on some of these shorter interested yeah, some of these stocks that are heavily short. So yeah, 326% up on the day, so not a bad little move if for some reason you caught that. We'll check out the heat map, and as Joe said and I alluded to, was a bit of a muted day. You can see lots of grey, which suggests the stock hasn't really moved at all, with Tesla moving 0.04% positive, which, I mean, good stuff, I guess. A little bit of red on the left side here. You can see in tech, Microsoft was down 1%, Google down 1%, but nothing really to write home about. Sometimes the market just doesn't really move in a day, and it kind of makes my part of the show a little bit quieter. But we'll jump into a few that were a bit interesting. Starting off with AMC, which actually moved 5.56% up. This was an idea we posted not long ago. Retested this support level, which has started moving in the right direction, which is nice. But yeah, this seemed like a pretty decent level from a risk reward perspective to try and get long. So we'll see how that plays out. But yeah, up 5.5% yesterday was AMC. AMD has run right into this pretty significant trendline resistance. We can try and clean this chart up a bit. It's a bit of a mess. There we go. Let's get rid of all this rubbish. Yeah, I mean, this resistance line has really been capping gains since the downtrend began. And we're right there. We closed just below the version I'd drawn. I mean, you can kind of move it a little bit, but that ticks the most amount of touches. So this has been touched 1, 2, 3, 4, and this is the 5th time now. So a pretty key level we're at. I'd certainly expect to see some selling at this level, but this has been quite a positive series of days for AMD. with this pullback here being bought into very quickly. So it looks like earnings are actually coming out for that after close today. So perhaps we can take a look at the corporate calendar and see some more details on that. But I mean, good earnings, you might really get a drive through that. So yeah, I'd expect another quiet trading session for AMD on the basis of that it is reporting earnings today. And then let's see what happens with earnings this evening. Be interesting to see. Amazon, another doji style candle after its earnings bump. Still trading at this resistance and the 50% fib level. Not too much else to say at the moment on that. Real indecision, maybe some profit taking as well after the gap up that we saw. Alibaba saw a pretty significant gap down again. I mean, just as you think this is turning around, it just kind of collapses again. We've had two gaps down, one in July and then, well, the second was in July as well. Volume on the downside as well. We don't like to see that. We've got earnings for Alibaba coming up on the 4th. So that is Thursday before the open. I mean, something's got to... Maybe, I was going to say something's got to turn this around at some point, but it really doesn't have to. It could just keep falling. I mean, we're still at $90, so still a fair way potentially to fall yet, but it's been a pretty rough time from the highs of over $300 down now to 90. What else have we got? Coinbase, don't need to really say much more about this, but we're still at this resistance. It's capping gains. Volume is coming off a bit as well. I mean, there's some really low volume yesterday, and with I think some of the cryptos looking a bit lower today, maybe there'll be a bit of a sell-off, and we'll start heading back towards this blue support, which we've had on the chart for a fair while now. Not too much more to say. Have I got Meta? Meta's still on here, 61.8% fib, is trying to hold as best it can, but it's really struggling. The sellers really started pushing this down again yesterday. If we look at this on a 4-hour chart, the early session was bought into pretty heavily, but then sellers stepped right in before it even got to the resistance levels. So yeah, Meta's still not looking so hot, waiting on a break of this 61.8 fib. Don't think we need to look at any of these. I don't know why they're still marked. Yeah, I think we could probably leave it there. So yeah, a bit more of a subdued day, which is okay every once in a while. But yeah, let's talk about for me. But earnings out this week. So yeah, what do we say? We had AMD and Alibaba were the two that we saw, but maybe there's a couple more that we could potentially take a look at, Joe. If I don't know if you've got some there, or
yeah, I'll bring up the calendar in a second. We've got one of our viewers on TradingView asking about sterling yen. So let's just take a quick look at that. Just because, you know, we want to have an interactive show with people that are watching. So if anybody is looking at anything that's of interest, please feel free to ask about it, and we'll do our best to cover it. So I'll just bring up the daily chart first of all on sterling yen, and it's a similar situation with the other yen pairs that we spoke about earlier in the show. Yen is starting to strengthen quite a bit, and as a result we're seeing some pretty aggressive moves because it's obviously been weak for such a long period of time. So with sterling versus Japanese yen, we can see really this move started back here on the 28th of July when we posted a really large engulfing candle. We've then taken out this short-term trend line on the 29th, and prices have continued to accelerate lower. So we've highlighted this swing low here from the 16th of June as an important support level. We're pretty much trading at that right now. So I guess there's a couple of ways of looking at this right now. We either believe that this support level is going to hold, and this overshoot that we're seeing right now offers a fantastic opportunity to get long, because we're going to see a recovery from here within this overall trend, or this range that we've seen playing out at the moment, or the break is actually going to pick up steam and we're going to see a continuation lower towards 155.58. I wouldn't really like to call it either way at the moment. In order to actually believe in a breakdown, I'd want to see this close below it on a closing basis. If that's the case, then I would be starting to target lower prices towards 155.60-ish. But if you are a speculator, I mean, let's just look at the intraday charts and see if we get any further clues on that. This is the 4-hour, again highlighting this swing low that we spoke about. Prices are overshooting that as it stands at the moment. If we get a close above that on the 4-hour candle, then that may be a decent cue to think about going long, with a tight stop below any low that we print over the coming hours, and maybe start to target a move to the upside. So potentially some fantastic risk reward on offer there if we get a close back above that level on the 4-hour charts. But that would be speculative, as all trading is. But hopefully that was useful for the person that requested that. Who was it? Have we got a name? Rose. So Rose, hopefully that helped.
Rose Luna Mary 2. That's what the name is. I just wanted to sort of highlight also for me, Joe. I mean, I know as analysts we look at sort of like a number of different things. I always like to look at the real big formations, that like the double tops or the triple tops or whatever they may be. For me, the major formation here on a weekly basis or a longer term basis would be these two highs here. The third high here wasn't far away either, so that comes into it. So here we've got a double top, which we're breaking through now. If we get close below there, then that could open up that measured move target would be a move down to 151.90, which isn't far away from the 151.10 swing low. And the major formation would be this double top here. If we manage to get a break of 155.60, then the measured move target becomes 143.73. So yeah, for me, if you're looking at this from a bearish basis, looking for that longer term move, then that is it. However, do bear in mind this price action that we've seen, which is very sideways based, I suppose we can call it, since we did get a break of the 158 level to the upside. Fibonacci levels, you got a 38.2% retracement coming in at 151.45, which is the measured move for that double top. And you probably got a 61.8 somewhere down there, somewhere in between there. But that's from the move we've seen since March 20 to June 22. So taking in mind a much longer term horizon.
Yeah, lovely. Thank you, Steve. So hopefully that was fairly comprehensive for you, Rose, and hopefully that was helpful. Okay, so let's move it on to the corporate stuff. As Jamie was talking about, we've got a number of companies reporting today. I've actually just whittled this down to the NASDAQ 100, just because we could be here all day going through all the names that are on this list, but just a few bigger ones to point out. We've got AMD, Gilead Sciences, PayPal, Starbucks, and those appear to be the biggest names out today. In fact, let's just have a quick look and see if there is anything on the S&P 500 that we should be keeping an eye out for. Let's see, the number goes up dramatically. Caterpillar, that's always pretty important for the economy. Many companies reporting today, as you can see, just seeing if anything stands out really. Please feel free to stop me, guys, if you see something. Yeah, so a few petroleum companies, just be careful. Lots of stocks reporting today, and that could create a fair amount of volatility. Okay, let's move on to the gun to the head trade. So shall we? So yesterday we posted a few trades. They all go straight onto our TradingView profile along with our streams. There's Steve's stream for crypto. If anybody wants to check that out, he talks about Bitcoin, Ethereum, and Ripple. With regards to the gun to the head ideas, just to reiterate what it is that we do here, we pick a trade idea live on the video. Each of the ideas must have a stop and a target. They're all placed at market, so get ready if you want to copy any of these, but do be aware they're highly speculative. The trade ideas will expire at 9 p.m. UK time or when the stop or the targets are hit. And if anybody wants to check out how they've done so far, there is a fair amount of history that you can check out on the TradingView profile under the ideas tab. So let's have a look at what we did yesterday. I went long of DAX following the breakout here. Decent move to the upside initially, but come 9 o'clock, it was slightly offside, which is a bit of a disappointment, but yeah, that's what happens. Steve, you were selling Bitcoin. Nice little head and shoulders that you'd identified there on the hourly chart, and prices chopped around a bit really, but you were on side with that one at 9 p.m. by 0.32 hours. So well done to you. And then finally, Jamie went long of New Zealand dollar versus the Japanese yen. He's highlighted a nice range that had formed on the 4-hour chart and was looking to take advantage of that. It has since been stopped out as a result of the overnight news we saw from the RBA. But at 9 p.m. last night, Jamie, you were 0.04 R on side. So
woo! Let's go.
We will take that.
Nice.
Okay, so fresh ideas today. What are we thinking, guys? Anybody got anything lined up?
Yep.
Okay.
You've
If you
highlighted it, Joe. There's no way I'm not going to sell these indices based on the information that you give me this morning. Yeah, so again, as everyone knows, very highly speculative. I'm going to try and keep the risk reward quite ample for this. But yeah, it feels like we're forming some sort of top because of obviously of the 26 week moving average. And yeah, it's breaking down the support we've got here, 12,833 under pressure at the moment. Below there, a break below 12,725 should open up the downside a little bit more. So I think we're getting some weakness coming to the indices today. But it is turnaround Tuesday, so it's always a bit of a tough one. So I'm selling Nasdaq at 12,842, targeting a move to 12,242 with a stop at 13,042. All the twos. So that's
what was the risk reward on that?
3 to 1.
Oh, lovely. Okay, cool.
Nice.
Jamie, you got one ready?
Yeah, I can go. So I'm taking a look today at the US dollar against Canadian dollar, and I've just identified this downward trending channel you see here. It's pretty well defined actually. If we bring this down to a 1 hour chart, here we go. You can see on the upside we've had this initial kind of set the trend line, and we've had one touch, two touch, and this is the third touch, or I guess the fourth if you include the initial one. And we have seen some selling already at this level. So I'm just going to hope for a continuation of this trend with the lower highs and the lower lows, and look to sell this all the way down to the bottom end of the channel, which in one day is a bit ambitious, but you know, you never know what can happen, so it's worth a go. We will therefore sell this at current price, which is 12874. There we go. So it's just trying to escape, but I don't trust it. Our profit will be at 12760, and our stop, what are we thinking? What am I thinking? I think I might give this a bit more room, just above these kind of wicks here. I know we've had this spike, but I think I can still get pretty good risk reward out of this, having it above this level. So yeah, we'll keep the stop around here at 12901, and that still gives us a 4.22 risk reward. Looking for a move lower on US dollar against Canadian dollar today.
Lovely. Good luck with that. Okay, I'm going to take a look at the opposite side of you, actually, Jamie. I'm going to try and buy the dollar index. So it's obviously been on a corrective path of late. Let's just bring up the daily just again so we can see this. So it's broken out of this trend. It's failed at resistance up here and looks to be on a corrective path lower. It's fallen into a 50% fib level, and I'm only going by the lows that we posted in May to the highs that we posted in June. 50% of that move comes in at 105.29, and we seem to have hit that quite nicely today, and some buying has occurred. So it is highly speculative, as we know, but given that we've seen a little bit of shakiness, certainly in the APAC region with the Taiwan news and with the RBA pretty much trashing the Aussie dollar overnight, maybe there'll be a step back into some defensive assets. So maybe the dollar will get bid as a result of that. So looking at it on the short-term setup, we can see we've got this 50% fib level. We've posted some decent looking green candles. It's currently trading at 105.60. And I'm going to put stop loss below the lows that we've posted over the last couple of hours or so, which will be at 104.99. And I'm going to target a move into these resistance levels here. Let's just get those drawn on. So there's a number of wicks here that seem to have capped the upside. So I'm going to go for a retest of those at 107.32, giving me a 2.72R risk reward ratio on that today. So that's my trade of the day. Going to get that published up right now. So if anybody wants to check it out, please feel free to do so. Just to point out, I did make a mistake yesterday on my DAX trade. If in doubt, when looking at the commentary on these ones, always go by the charts. The charts don't lie, people. That's where you should be focusing your attention rather than on the text. I rushed that out a little bit and make sure to be a bit more careful going forward.
Naughty.
Yeah, very much so. Okay, so day ahead, we've got the US JOLTS jobs opening data, which is due out at 3 o'clock UK time today. So pretty light on the macroeconomic front. As Jamie mentioned, and we went through a moment ago, there are a number of companies reporting in the US. So if you've got exposure to stocks at the minute, do check to make sure if your companies that you're involved in are reporting today, and try and familiarize yourself with what the expectations are and what that could potentially do to price. Over the rest of the week, starting tomorrow, we've got the US ISM non-manufacturing index. Then we've got the Bank of England policy decision on Thursday. And then we've got the two big job numbers on Friday, most notably, of course, the US non-farm payrolls. So that is that today, I believe. Although we have had a question, somebody asking about gold. Steve, we have gone over that already, but do you want to have a quick reiteration just so we can show how flexible and agile we are to help people out where we can?
Oh, of course, of course. So the question is, can I have a word on gold as I'm long from 1750 for 1800 or so? What do you suggest? So I'm not actually going to suggest anything because that would be financial advice. So I'm not going to give you that because I don't know your circumstances. So it's very difficult to do that. So you're long at 1750. If I was long at 1750, targeting the move to 1800.
Hypothetically,
If I was, I'd be quite happy at the moment with the way things are going. Obviously, we've got, this is an hourly chart. We've got a downward trending resistance, which I drew from here to here. This is like bringing in maybe 4 or 5 points. However, it's been a long time in the terms of the hourly chart. But we have found some resistance around that same level. But I would take this more from the horizontal price action that we saw, where buyers and sellers realized that 1784 was quite a decent level. For me, 1784 is the next resistance. There is potential for it to move towards the 1800. But you know, if we do get some sort of turnaround, and also remember there's this inverse head and shoulders on the 4-hour chart, which I targeted to move to 1797. So for me, for this inverse head and shoulders formation to play out, that's where my target would be. But being long at 1750, I'd be very wary of a break below there, 1750, and maybe even, you know, I'd bring my stop maybe up to there or whatever. But yeah, last 4 to 6 hours haven't been great, but it's still in that upward trend. So I'd feel quite comfortable at the moment and continue to look for that higher prices. But yeah, stop tightening the stop wouldn't be a bad idea. Hope that helps.
Sound, not going to say advice.
We've got to be very careful if we say investment advice, because investment advice is when people give you financial advice based on your present circumstances. We don't know any of your present circumstances, so what we do is give you our opinion on the charts and where the markets are moving. We're allowed to talk about trade ideas because we're regulated.
Sure.
There you go.
Okay. Lovely. Thank you, Steve. Hopefully that was helpful for you. And yeah, going forward, guys, if anybody's watching the stream and has any questions, please feel free to reach out. We do our best to cover as many markets as we can. So that wraps it up for today. We will be back tomorrow. And until then, everybody, trade safe.
Yeah, good luck, everyone.
Bye-bye.
Bye.